back-to-back bearish and bullish reversal candles can take the place of full swing points during aggressive trends, particularly aggressive trends to new record highs or lows. Fib retracements can help identify suitable swing points for fib extensions, even when more complete swing points develop on the chart. The downtrend retraces from the peak at 3,000 to the 2050 low on June 15th. Point 3 was not moved to the end of the larger retracement in mid-July because that would have lowered the extension levels as the aggressive uptrend resumed. The extension levels were quite precise even when volatile downswings formed. It looks strange to have point 3 not extended down to the lower mid-July upswing, but this is an exceptional case due to the steep uptrend. Even a marginal lowering of point 3 would have greatly decreased the precision of the 4.236 level in November. As new record highs are reached, a new fib extension covers the same general price range, with newer swing points for points 1, 2, and 3. However, the results aren't much different due to the small base trend and retracement in the same general price range. A larger base trend and retracement are much more useful. Note, there is still imprecision when larger price fluctuations take place. Not all swing points are covered by the default fib levels, but this is of less concern with larger and sharper reversals. Sharper reversals would be obscured if too much detail was covered with additional fib levels, such as between the 2.618 and 3.618 levels. An uptrend line derived from upswing points can be helpful for other purposes, but is of little use in conditions with fib extension levels meant to identify potential areas of resistance at even newer record highs. The historic case of Bitcoin price climbing demonstrates how fib extensions continually need to be adjusted and redrawn when there are rapid and large price movements. These kinds of situations also highlight scenarios where larger base trends and retracements are the best option. A stable uptrend line in this context would only be useful for identifying stronger support to oppose large corrections that don't take place. The moderate retracement from previous highs at 7,895 provided an opportunity to use a fib retracement to identify a minor pullback. This provided valid points for a fib extension. An uptrend line derived from downswing points was helpful to a limited extent in highlighting the breakout area to new highs in late November. This breakout is the normal steepening of the larger trend after point 3 seen with other examples. Unlike the previous example of Unity stock peaking at record highs with compressed extension levels, this chart is able to utilize additional extension levels with less issue due to the larger base trend widening the increments between fib levels. However, there is still lowered precision from the extraordinarily wide price fluctuations. Even though the peak at the 2.272 fib level had clear bearish price action, it would be more realistic for most market participants to realize the long-term shift downward as more than a moderate retracement by the start of 2018 at the earliest. A fib retracement can now replace the previous fib extension to identify more significant swing points. A new fib extension based on the established downtrend is more appropriate than the previous fib extension based on the reversed long-term uptrend. Fib retracement levels help identify more suitable swing points for the fib extension that can provide finer details compared to the large fib retracement. That means point 3 is likely to be less appropriate compared to using the downswing before it, even though it forms a more valid long-term downtrend line. Here is another case where the trend starts off volatile and begins to stabilize with narrower price fluctuations as the trend decelerates. That means the extension levels are even less precise in identifying support levels that would oppose the downtrend. Using that last downswing point in 2017 closer to the fib retracement level produces significantly better results despite the relatively small distance between these two downswing points used for point 3. The base trend is extended to cover more area as the large-scale downtrend slowed but still progressed lower. It was unfortunate point 2 was not close to a fib retracement level from the previous large fib retracement. However, it may not always be possible to have all fib extension points align with fib retracement levels. Fortunately, point 3 formed a downswing near a level from the old large fib retracement and forms the final downswing before the steep long-term downtrend line is eventually broken. This large fib extension highlights another case where levels below 1 identify major opposition to a trend. Using the slightly lower downswing point for point 3 was a technical mistake, but had less of an impact. This is due to it being part of a relatively flat double top reversal from February to March 2018. It is also near a level from the old large fib retracement and the previous downswing used for point 3. Price also began to stabilize significantly compared to the period before the downtrend line was broken. The narrower price fluctuations after the downtrend line was broken also provided suitable conditions to use a smaller base trend and retracement to capture smaller swing points as the chart drastically decelerates before and after the 2019 New Year. Using a slightly larger base trend and retracement is also possible. This case demonstrates another instance where different fib levels can identify similar areas of opposition to a trend, depending on the various points used for points 1, 2, and 3. Like other examples, this phenomenon is more likely when price fluctuates less rapidly. With trading decelerating into more range-bound phases, a large base trend will be even more imprecise and less useful with a small retracement. A relatively small base trend was most suitable even after the large November drop, which had a noticeable but not significant impact on the precision of the extension levels. Moving point 3 to the high of the long upper wick in October could have limited these issues. It was a higher point and sharp retracement marked by the first drastic price fluctuation in a long time, prior to the swift November drop. Like fib retracements, it can sometimes be possible to validate fib extension levels with past reversal points. Using a trend line is once again a complementary mark to extension levels and not a primary part of analysis. A steeper acceleration commonly seen after point 3 limits this downtrend line's precision. That was actually quite decent compared to other examples. A stable uptrend after some sharp drops leads to a series of narrow retracements. This results in a compressed fib extension when using the first retracement in the developing uptrend, since the base trend is relatively small. Subsequent retracements are approximately the same size, but the base trend can now be expanded to widen the spacing between fib levels. This becomes helpful as the chart returns to an aggressive but stable uptrend with swift movements into newer record high ranges. Extending the base trend even more is a suitable course of action as the rise steepens without larger retracements for the rest of 2020. When larger retracements begin in 2021, it is suitable to plot a new fib extension with a relatively large base trend at higher swing points. This is done to an extent, but using swing points above 20,000 for points 2 and 3 would be more preferable after the moderate retracement became more apparent by late February 2021. However, the extension levels are still adequate in approximating significant resistance opposing the uptrend, rather than precise identification of exact downswing points. This is acceptable since major price fluctuations took place to form a head and shoulders reversal, similar to the start of the Unity stock chart example.